kick-started and tell you what's been happening with the US markets. It's not been a very good day for the US markets if you take a look at what happened on Friday, because you have the Dow that has closed with cuts of almost 1%, S&P 500 also lower by 1% almost, and you have the Nasdaq that underperformed the entire market, a 1.5% cut, almost a 1.3% cut coming in on the Nasdaq. It's a 400-point cut coming in on Dow Jones, and overall the indices on the US markets have closed in the red. Now, a lot of this has to do with the tariff fear that or rather the tariff war, the trade war that has been orchestrated by President Donald Trump. And remember, today is also the day where China is expected to retaliate back, and the tariffs that they are going to apply rather on the US are going to come into effect from today. At least that is what we understand from reports. And let's also talk about the earnings fronts, because the 2/3 of your S&P companies have reported a rather decent set of earnings. But when you talk about what the major benchmarks have done, they took a leg lower during the session after President Donald Trump said that he was planning reciprocal tariffs on trading partners. So that is something that has not been taken well by the street, because this could also mean raising tariff levels across the board to equal rates charged to the US. And that is what Donald Trump has also said over the course of the weekend. The stock market was already on edge before Trump made this statement, as some consumer sentiment and job data pointed to a pickup in inflation, and this also spiked the 10-year Treasury yield to above that 4.5% mark at its session high. So that is also something that has not done well for the US markets. Consumer sentiment data, that's something that we got over the weekend, that fell in February to 67.8. Now, economists that were polled by Dow Jones had expected this number to be 71.3. So it's quite the cut coming in from what was penciled in for the street. But perhaps more concerning was the report's respondents anticipate a one-year inflation rate to hit 4.3%. That is again something that is not panning well for the US markets. And for all of these reasons, the market was tanking on Friday. Cuts coming in across the board. Amazon too lost 4% after guidance from the e-commerce giant disappointed investors as well. We'll be telling you about that more in detail as well. Overall, it's been a rather volatile week coming in for the US markets. So while that is everything that's been happening with the equity markets, let's also take a look at what commodities have been doing. It's looking good for WTI and Brent right now, because both are trading with 0.5% gains. That's the last price that we have. It's a third straight weekly gain coming in for both of these oil indices. They finished with daily gains on Friday after new sanctions were imposed on Iran's crude exports, but prices were down for the week as investors worried about US President Donald Trump's renewed trade war on China. Brent lower by 3%. You had WTI also 2% over the course of the week that went by. Now, the US Treasury said on Thursday that it was imposing new sanctions on a few individuals, and this includes China. You have Iranian crude oil. All of this was under pressure. Remember, Trump has announced 10% tariff on Chinese imports as part of a broad plan to improve the US trade balance, and they have also suspended plans to impose steep tariffs on Mexico and Canada. That's something we heard last week. For the ones on Iran as well as China stay, and also it's important to remember that reports suggest that China is going to be retaliating with their tariffs today as well. So it's going to be important to see how the US markets, as well as how both of these oil indices, you have WTI as well as crude, how both of them act in today's trade. But that's the lowdown on what equities and commodities have done over the course of the weekend, Priyanka.